Welcome to today's market report.
European stock markets traded higher on Thursday, continuing the global rally, helped by generally positive corporate results ahead of the latest meeting of the ECB. DAX in Germany traded 0.4% higher, CAC 40 rose 0.5%, FTSE 100 climbed 0.2%. The major indices all closed higher on Wall Street Wednesday as investors resumed bets on reopening stocks, shrugging off a fresh wave of COVID-19 cases in the likes of India and Japan that threatens to slow the global recovery. Stock markets in Asia largely followed suit, with Japan's Nikkei in particularly closing over 2% higher, and European has continued the theme. Pernod Ricard stock climbed over 2% to its highest level in a year after the French drinks maker reported strong sales growth in the 3 months to the end of March, helped by strong demand in its key US and Chinese markets. UK rival Diageo also benefited on the read-across, with its stock climbing 1.4% to a 52-week high. SAP stock rose 2% after CEO Christian Klein said the software group had an absolute blowout in the cloud in the first quarter, while Hermes stock climbed 2.8% to all-time high after sales at the luxury good manufacturer, famous for its Birkin bag, soared 44% in the first quarter, powered by strong growth in Asia. Nestle stock also climbed 3% after the Swiss food giant confirmed organic sales should grow more than expected this year after strong demand for its coffee and dairy products boosted growth in the first quarter. Credit Suisse stock fell 3.5% after the Swiss banking giant posted a first quarter loss and announced a 1.7 billion-franc capital increase as a hefty hit from the Archegos hedge fund scandal spoiled what would have been its best quarter operationally in at least a decade. Renault stock fell 2.2% after the French carmaker's revenue unexpectedly fell in the first quarter as it lagged behind European peers in recovering from the pandemic. Later Thursday will be the latest policy-setting meeting of the European Central Bank, even with the central bank widely expected to leave its policy and guidance unchanged. Oil prices slipped on Thursday, continuing to weaken after a surprise increase in US crude inventories, added to concerns about growing numbers of COVID-19 cases in India and Japan, the third and fourth largest oil importers in the world. US crude futures traded 0.7% lower at $60.93 per barrel. Brent fell 0.6% to $64.90 per barrel. Gold futures were flat at $1,793.10 per ounce. On the FX front, GBP/USD has been hovering around 139.50 as markets are torn by mixed virus developments. Sterling is well positioned to attack 140 on the next market upswing. US Treasury yields rise from a 6-week low has also kept the dollar bid. Will it last? The focus may easily shift back America's economic boom, especially if jobless claims refrain from leaping back to the previous higher. The decrease from levels above 700,000 to 576,000 last week was a welcome surprise, and economists expect a consolidation of this improvement. The market move may improve due to an improving virus situation in the US. After several weeks of increasing cases, the curve flattened and has begun turning down, as long as investors do not worry about slowing vaccination rates. Partly due to the decision to suspend the usage of Johnson & Johnson's jabs, shares have room to rise and the dollar could fall. The UK is on the verge of reaching 50% of its population with at least one dose of immunization, while infections hospitalizations and deaths are all declining. Some resistance awaits at the daily high of 139.50, followed by the fresh April peak of 140.10, supported at this week's swing low of 138.80, followed by 138.50 and 138. Following the inconclusive price action on Wednesday, Eurodollar now managed to resume the upside and revisits the mid-120s or daily highs. Eurodollar adds to the small advance recorded in the previous session on the back of the continuation of the selling bias surrounding the buck and the leg lower in US yields to new multi-week lows. The dollar index was at 91.013, just above the 7-week low of 90.85.
This is today's market news. Thanks for listening. We'll see you next time.